multiple choice. If you had gone through go through my recording for the notes partnership accounting for the A-level accounting, then you'll know what we're going to do for the multiple choice. So before you do the multiple choice, try look into the note that I shared before. Okay. Question number 1. Which rule does not apply in the absence of a partnership agreement? When we do not have the partnership agreement, first, most of the no means that there is no salary, no interest on drawing, no interest on capital, and the ratio, the profit sharing are equal. And assuming the capital contribute also will be the equal, except the 5% interest on loan. So this is a interest on loan, 5%. So in here, which rule does not apply in the absence of the partnership agreement? No interest, no salary, profit and loss are shared equal. So these all apply when there is a no partnership agreement. So here, interest on loan is charged not 6%, 5%. Okay, let's move on. The partnership of Ravi and Tanya, who share profit equally. This is profit equally, was dissolved. The capital account prior to the dissolution were Ravi 50,000, Tanya 60,000. The current account balance prior to dissolution were Ravi 35, Tanya 35,000, both also 35,000. The loss on the disposal of partner net asset. So this is a loss. This will reduce the capital. How much money did each partner receive when the partnership was dissolved? So we open the simple T account. Capital account. We have Ravi, we have Tanya, we have Ravi and Tanya. So the capital amount is 50,000. So we have the balance right now, 50,000 in here. And here, 60,000. When the partnership dissolved, we had to close the current account, transfer to the capital. So here will be 35,000, 35,000. Okay, next, the loss, because profit share equally, so the loss will be in the debit side. Share equally is 5,000, 5,000. So how much money you will receive? Take the total credit minus the debit. Here is 85,000. Here is 95,000. So the amount to be paid, 85 minus 5, 80,000, and here 90,000. So the answer will be B. Okay, let's move on. Partnership profit 60,000 accrued evenly through the year ended 31st December. Jim become a third partner. on 31st. The partner share profit equally from the date. An irrecoverable debt of 12,000 in financial year. This is irrecoverable debt, reduce the profit. Will ignore when calculating Jimmy's share of profit. So it means that this profit, we should exclude this one. So when we're going to exclude it, the profit for the year, 60,000. We had to add back irrecoverable debt, 12,000, because we need to calculate how much to be shared for the gym. So total amount before the irrecoverable debt, 72,000. There are 2 periods to take notes. 1st Jan to 31st March and 1st April to 31st December. Here is a 3 months, here is a 9 months. And Jim Joy fall into this period, only 9 months. So how much the profit to be received? So we have to take 72,000 accrued evenly, means divide by 12. And here only 9 months. And how much Jim will be shared? They share equally. So means we have to, Jim will get 1/3, which is 1/3. So use the booking to get your answer will be 18,000. So here will be 18,000. This part is not entitled by the Jim because Jim is joined on 31st. 31st is the last day of March, so it's fall under this period. X and Y are in partnership and revalue their asset as following. So they are sharing the profit ratio is 2:1. Here is 2, here is 1. So how much the X? First of all, the revaluation here is increased by 21,000. 71 minus 50, 21,000. But in here is a decrease. So when you decrease, you have to minus. Same inventory also decrease. So we have to minus. So the net amount 21 minus 6, we get 15,000. How much do we share by X? So here is 2. So we take 15,000 times 2/3. So we get 10,000. Okay, next move on. X and Y been in partnership in some year. For some year, and Z was admitted as a partner. On that day, the premise account was debited 120,000 following a revaluation. Profit was shared equally both before after Z admission. So what will be the credit entry recorded in the revaluation? So this asset is only belong to the X and Y, the whole partner. So the amount already debited to the premise account. So the credit will go to the capital account. Capital account belong to X and Y because both before and after also equal the profit share. So here we'll get 60,000 Y also will get 60,000. So the answer will be B. Okay, next. X and Y were in partnership, sharing profit and loss equally. Z was admitted to the partnership and it was agreed that profit and loss will be to be shared equally. Goodwill was to be valued at the date of admission, but was not to be retained in the book of account. How did the goodwill adjustment affect the partner capital account? So we'll just roughly explain how is the accounting treatment for the goodwill. Under the capital account, when you're creation of the goodwill, you will put into the credit. When they say the book was not retained in the book of account, means that you have to debit it, which is the goodwill written off in the debit side. And goodwill, this is the O partner, plus Z is the new. So creation of the goodwill using the O ratio. Goodwill written off using the new ratio, which is that X, Y, and Z. In here, only X and Y. Okay. So X capital account, we just put a number of the amount to show the impact. Let's example, the goodwill creation is 9,000. So share equally, they share equally. So here we'll get 4,005. Here we'll get 4,005. When you write off, not to be retained into the book, so we have to write off this amount, assuming they are sharing the equal as well, because they are sharing the equal. So here we'll get 3,000, 3,000, 3,000. So basically you notice that X credit more than the debit. So capital account credit is an increase. So capital account is an increase for the X and the Y, because this amount credit more than the debit. Whereas Z capital, it will be decreased. So basically, Z has to pay to X and Y. So the answer will be C. Okay, next, L and LMN are in the partner sharing profit ratio in the ratio of 3 to 1. M retire. This is a retire. At the date, the balance M capital was 37,000. No current account were maintained. The following were the term of M retirement. Goodwill was valued at 24,000. Freehold property was revalued outward. Outward means increase. M took over a motor vehicle at value of 7,000. What was the final settlement? So we open a capital account to see the position of the transaction. So this is a capital account for the M. So M before have a balance brought down 37,000. And the goodwill, how much he will get? Because M is the 2, so we will take 2 over 6, which is we get 8,000. So this 8,000 belong to the M. Revaluation, upward 30,000. So take this times 2 over 6, which is 10,000. So here, revaluation will be 10,000. So total in the credit side. M took over a motor vehicle. So here, double entry, debit capital of M, 7,000, and credit the motor vehicle. So now, how much the balance or how much the amount to be paid to the M upon retirement? The credit total is 55,000, 7,000 in the debit. So your net differences will be 48,000. So the settlement is 48,000. Next, where is the revaluation account prepared? When a new partner is admitted, this revaluation is normally referred to the asset. Okay. So when new partner, for example, the premises, 20 years ago you bought, the price sure will increase for today. So it will revalue upwards. It will be enjoyed by the old partner only. So when the new partner joining, new partner will have to pay the cost for it. So this one is one of it. When an existing partner retired, when the partner retired, this old asset also belong to the old partner. So we should recognize the efforts for old partner. So we should recognize it. When the partnership is sold, that means we close down the partnership. That point, we should have the realization account, not the revaluation account. So therefore, only 1 and 2 will be the right answer. Okay, next. P and Q are in the partnership sharing profit equally. The following information is available in respect of P: current account credit balance, share of asset revaluation 10,000, drawing 10,200. The total partnership profit for the year is 130. Partnership salary were P 20,000, Q 30,000. What was the balance on the current account of P at the end? So looking at this item, revaluation, where is the double entry should go to? Capital account, not the current account. But they are asking the current account. So this is not related. Drawing, it will be in the debit side. It's in the debit side of the current account. So these two will affect the current account. Come to the profit. The partner profit for the year is 130. So how much to be shared? We have to take 130,000 minus 50,000, because this is the salary for the both. So we get 80,000. So this 80,000 share equally. So you have to divide by 2. So the profit share is 40,000. But how much belong to the P? So we open a sympathy account. So this is a current account for the P. So balance brought down, which is 20,150. Drawing in the debit side, drawing in the debit side. Share of the profit, 40,000. Share of the profit, 40,000. And salary, 20,000. So the total in the credit is 80,150. So how much the balance carry down? So the balance carry down will be taking the 80,150 minus 10,200, which is we get 69,950. So the answer will be B. Delay and Isabeau are partnered in the business with a ratio 3:1. Their profit for the year is 80,000, and interest on capital total is 5,500. Here is 1,005. To find the profit share, the residual profit, we have to take the profit for the year, which is 80,000. Interest on capital, we have to minus. Interest on drawing, we have to plus, we will increase the profit share. So the amount total net is 76,000. And according to the ratio is 4 total. So divide by 4. So we get 19,000. And D and I is 3 to 1. So take 19,000 times 3. We will get 57,000. And 19,000 times 1. We get 19,000. So the answer will be A. Okay, next. Which item only appear on the credit side of a partner capital account? Only, okay, credit side. Goodwill in an agree ratio split. In a capital account, goodwill can be credit when you have creation of the goodwill. Goodwill in the debit when you have return of the goodwill, not to maintain in the book. Opening balance, which is the balance brought down. Balance brought down must be in the credit side only. Profit on revaluation of asset. Profit for the revaluation will be in the credit side. If you have a loss on revaluation. Okay, loss on revaluation, it will be in the debit, but this is a profit, is in the credit. Transfer from current account. The transfer from the current account could be debit, could be credit. If the amount is going to capital in current, if the amount is debit capital, credit current account, it means that capital transfer to the current. If the capital account is in the credit, current account in the debit, it means that current account transfer to the capital. So the answer will be this and this only. 2, and the 3. Question 12. X and Y has been in partner sharing profit with the ratio 1:2 respectively. Z was later admitted to the partnership. It was agreed that the goodwill is valued at 120. Same, no goodwill account to be maintained. Profit and loss were to be shared is 2:1:1, and this is 1:2. What was the effect of the goodwill adjustment in X capital? So if we open a simple capital account for X, when you have creation of the goodwill, this is using the O ratio. So goodwill for the X will be 120,000 times 1/3, which is 40,000. And after the return of the goodwill will be 120,000 times 2/4, which is 60,000. And in this case, debit more than the credit. So when debit more than the credit, capital will decrease. So the decrease will be the differences, 60 minus 40, which is decreased by 20,000. Okay, 13. J and K share profit equally. Their capital account balance were J 400,000 and K 160,000. L was admitted as a partner. The 3 partners share equally. Here also share equally. On admission of L as a partner, asset will increase revaluation, increase 210. L pay a capital equal to the average new capital balance of J and K. So what was the amount paid by L? First of all, these two total is 560,000. And this increase, it will have to add into here 210, which is total 770,000. This is a total capital for both after the increase. And they say that average of the new capital means take the 720 divided by 2, you will get 385,000. So this is the amount that L have to pay. So your answer will be D. 14. Why is the profit on the revaluation credited to capital account and not the current account of the existing partner? Why we create the revaluation? But revaluation is a unrealized profit. Unrealized profit means that the profit has not yet been earned or received. So when you sold the asset, so it will become realized when you sold it, once the asset is sold. So that when the point is sold, it will be realized. And this revaluation is not sold the asset yet. So we call unrealized profit. Unrealized profit, we have to put into the capital because it could be in future, the value will decrease. So that is called unrealized profit. So the answer will be profit on revaluation is an unrealized profit. X and Y were in partnership, sharing profit and loss equally. When Z become a partner, profit continue, share equally, and partner goodwill is 120. Goodwill was not retained in the partnership book of the account. When there's a cases, so what is the action to be done? So we open a simple T account, showing that how is the creation, how is the write back of the impact. So this X, Y, and Z, X, Y, and Z. When the X goodwill created, only shared by X and Y. So this will be the goodwill creation. Each will take 60,000. But when you write off not to maintain, okay, not to retain in the book, means that both all will share equally. So when you share equally, each will get 40,000, 40,000, and 40,000. So what happened to the credit X and Y? Notice that credit more than the debit, it will increase by 20,000. Whereas Z is debit, 40,000. So the answer will be A. An inexperienced bookkeeper had prepared the following appropriation account for the partnership of P and Q. So you have the profit as per income statement, interest on capital. So the correct format for it should be the profit for the year, this amount, 18861. Interest and salary, which should less, not minus. So interest on capital, salary, we have to minus, not plus. So 1,005, salary 900, we get the amount 16,461. So this is the correct amount for the balance of the profit. So what should be the correct share of the residue to the P? So this P is how we know that what is the ratio. Before we do it, we have to calculate for this one. So if you notice that the ratio, the sharing of it for the P is 12174 over 18261, which is 2. This one is a 2 to 1. This is the Q. This is the P. And so this is a ratio should be, okay, 2 to 1. So the ratio is 2 to 1. So using the ratio that we know from here, we put in the correct amount, which is 16461 times 2 over 3. So we get 10974. So which is the answer. Okay. Now let's continue for the next question. So each set of it, I prepared 30 questions for exercise. Okay. L and M are in partnership. The following information relate to the year end 31st December. What was the profit for the year ended 31st December 2017? Drawing, this is the item that we can see from here. They ask for the profit. So which one is related to the profit? This is under the current account. interest on drawing, the total is 3,000. Loan, this one is under the income statement. So these two will not be public. Salary, yes, these two is related to the appropriation account. Residue is a appropriation account. So what is the total amount for it? This total amount is 54,000. So we want to get the profit for the year. So we get the profit for the year. We plus interest on drawing minus interest on capital minus salary. We get the share of profit. So now we want to find, we work backwards. So we have to take this plus this and minus this. So therefore, the residual profit is 54,000. And then here salary, we have to add salary 20,000. And here we have to minus 3,000. So the total amount will be 71,000. Okay, next move on. Z is admitted as a new partner in the partnership of X and Y. He brings the following into the business. Interest on capital is calculated at 10% per annum. There is no goodwill on Z admission. So what is the interest on capital per annum? So how much total the capital that contributed by the Z? So the total amount contributed is 37,000. And interest on capital is 10% per annum. So we times 10%. So we will get 3,007. So the interest on capital will be 3,007. Okay, 19. L and N are the partnerships sharing the profit equally. So they share profit equally. No goodwill account is maintained in the account. And join the partnership and pay 30,000 cash for his share of the goodwill. So what happened is capital account for the Z. He used this money, 30,000, and this 30,000 is for the goodwill purpose. So therefore, the bank will receive from the capital Z 30,000. But this 30,000 is for the goodwill payment. So it will offset this amount. The goodwill created is belong to the L and N, 15,000, 15,000. And this amount, we're going to write it off. We will go to put into the Z, 30,000 K. So there is a goodwill written off, which is he used 30,000 to pay off. And this amount for capital L and M will increase 15,000, 15,000. But for Z, he paid and write off. So basically is 0. So the answer will be C. Z and Y are in partnership, sharing profit and loss in the 2-to-1. So here the sharing ratio is 2-to-1. Z method and the profit sharing will be X, Y, and Z is 2-to-1 and 2. Goodwill value 90,000. Z will pay the partner for his share of the goodwill. How much will Z pay for this X? So if you open the T account, in terms of the goodwill created, so goodwill is 90. Share 2 to 1. So when you share 2 to 1, Z will get here 90 divided by 3 times 2, you get 60. And here is 30. Whereas when it's written off is 5, the total ratio is 5. So get 90 divided by 5. Okay, and then for the X, 90 divided by 5 times 2. So we will get 36,000. Okay. 36,000. So this 36,000 compare with the creation, the difference 24,000. So this 24,000, which is the X, Z to pay the X, which is answer is B. Let's continue. D, E, F are in partnership. So 2 to 2 to 1. This is the ratio. D allowed the annual salary 10,000. Z has made a loan to the partnership on which the partnership pay interest 5,000 each year. Profit for the year before appropriation was 150,000. How was the F total share of the profit? So here, the interest on loan, this is under income statement. So it's not under the appropriation account. So therefore, the salary only need to minus from here. So 150,000 minus 10,000, left with the 140,000. So this 140,000 total is 5, the ratio. So we have to divide 5. So we get 28,000 because F is only one portion, so which is B. L and M has been in partnership sharing profit and loss equally. P was admitted to the partnership and partnership continued to share profit and loss equally. Goodwill was valued at 48,000, but partner agreed no goodwill account will be retained. So what were the accounting entry to record the goodwill? If we open the T account, here L, M, P. L, M, P, the partner. This is a goodwill creation. The total goodwill 48,000. Share equally, that means here 24,000, here 24,000. Subsequently also reverse, which is the goodwill written off. This is a written off. Okay, when we write off the goodwill, so 3 share equally means that 48 divided by 3. So we get 16,000, 16,000. So now the differences. This one will increase 8,000. Same here, increase 8,000, but P will decrease 16,000. So therefore, the double entry will debit P, okay, 16,000, And then credit L, 8,000, 8,000. So the answer will be donkey. Okay, question 23. Goodwill is adjusted in the partner account when there is a change in the profit ratio. So the creation and the write-off. Goodwill creation is recorded in the credit side. Okay. So using the O profit, this is a current. So these two cannot be the answer. C and D cannot be the answer. Only capital. But credit is using the O ratio. Debit using the new profit ratio. So the answer should be A. Question 24. X and Y were in partnership, sharing profit and loss in the ratio 5:3:2 respectively. The capital account balance before adjustment 40, 30, and 20. X retire from the partnership. X and Y, Z retire, sorry. X and Y continue in partnership, share profit ratio 3:2. Net asset will revalue outward. Outward means increase. Okay. What was the capital balance for the X following the retirement? So we open a simple tree account. This is for the capital X. Capital X before have balance what now? 40,000. Under this asset revaluation increase, outward is increased, and the increase is 5:3:2, means that times 5/10, which is 5,000. The revaluation is 5,000. This is 5,000. Next is that what was the capital account? There is no more other entry for it. Therefore, the new balance for the X will be 45,000. So 45,000. Okay, next. The provision of the Partnership Act apply if partner do not draw up a partnership agreement. What is the without the partnership? What is the act saying that? First, no. What is the no? No salary, no interest on capital, no interest on drawing. Number 2, equal. Profit or losses, share equal. Capital also assume is equal. Third, interest on loan is 5%. So therefore, which one is not draw up? Okay, so which is true about the provision of the Partnership? Interest draw is charged at the 5%. This is the interest on drawing. Drawing, no. So this is wrong. Interest on loan, this 8%. No, this should be 5%. Partner are not entitled. Yes, no salary. Partner to be shared with the ratio of fixed. This is equal. So the answer will be C. Okay, let's move on. (26) L and N are business partners. Share profit and loss in the ratio 2:1. On 31st December, their capital and current account show the following credit balance. At 1st Jan 2019, N transferred his private motor vehicle. This is related to capital. This motor vehicle is original cost 15,000. Current market value is 8,000. We had to take the current market value when we do the transfer to the business amount. asset. Both partner withdraw 20,000. What was the total each partner capital and current account? This amount will deduct minus from the current account, which is in the debit side of the current account. So therefore, this amount M is private motor vehicle 8,000. So here should increase 8,000. Whereas this one no change. And this one drawing will reduce the current account, which is you have to minus. Here also have to minus. So for the L, capital account no change, which is 200,000, 200,000, 200,000. For the current account, which is 20,000, have to minus. So left with 20,000, 20,000, 20,000. When I come to the M had to increase 108,000 for the capital because of the motor vehicle. Current account reduced by 20,000. So the answer will be C. Okay, let's continue. The following information about the financial statement of a partnership is given. Profit from the operation, interest on bank loan, interest credited to capital account, drawing, partner's salary. What is the remaining balance of the profit to be approximated among the partner? This is talking about the share of the profit. So this one profit before profit from operation. This is a before interest. So we want to find the profit for the year. We have to minus the interest on bank loan to get profit for the year. And this is the interest on capital. Interest on capital reduce the profit share. Drawing is under current account. It's not the interest, it's a drawing. Principal amount. Partner salary will decrease the share of the profit. So we take 160 minus 14,000 minus 15,000 minus 24,000. So we will get net 107. So this amount will be shared among the partner. Okay, let's continue. X and Y are in partner. Okay, see what are the agreements. Asset of the partnership will be value outward. Value outward means increase. Say capital will increase. Value of goodwill 20,000, but no goodwill account will be retained in the book of account. Z will introduce 80,000 cash. Profit and loss sharing 2 to 1 to 1. What was the Z capital? Immediately. Capital for the Z. So this one is for the O partner, which is X and Y, not belong to Z. Value of the goodwill, because this is not remain into the book, means we have to write it off. When we write it off, here is 20,000 divided by 4. So this amount, 20,000, okay, Z is sharing 1/4, which is equal to 5,000. Okay. How much contribution for the cash? So this is the cash contributed 80,000. So therefore, the new balance for it will be 75,000. So this is the amount after the Z inject the cash. Okay, 29. PQ are in partnership. R was admitted at 1st July and the profit ratio is 2 and 1. So for the purpose of R admission, the partner goodwill will value at 20,000 but no retain in the book. R introduced, okay, let's open the T account. They ask for the R capital account. So we open the T account. So this goodwill not to be retained means that goodwill capital account for Z, for the R, sorry. Okay, for the R. So this amount we will take 20,000 times 1 over 5. Because total this one is 5. So here will be 4,000. And the contribution on the cash is 40,000. And then motor vehicle is 10,000. Total is 50,000. So the balance for it, 50 minus 40 minus 4 will be 46,000. So this amount immediately after the admission. Okay. Last question. Hillary and Lee commence a partner in 1st Jan. There was no partnership agreement. They provide, when there is no partnership agreement, there is no for the salary, no for the interest on capital, no for the interest on drawing. Okay. And then profit or losses share equal. And interest on loan is 5%. So in here, there is no partnership agreement. Here, the loan interest will be 5%, which is equal to 50. Okay. Profit for the year ended before the loan interest. Before the loan interest was 8850. So we want to find the profit for the year. Profit for the year. Or share of the profit. We have to minus. So 8850 minus 50. So we get 8800. This is also equal to the share of profit. Because no salary, no interest on capital, no interest on drawing. So this amount will be shared equally when there is no partnership agreement. So you divide by 2, so you will get 4,400. Okay, that's all for today. For the partnership multiple choice, paper 1, that I will share with you all for today.